here. So because I had so many inquiries on, showing people how to gain life insurance where their children can gain cash value and be millionaires, by a good early age, I thought I would just create a presentation, a webinar for you guys to come in and understand what it looks like to do so and really just teach you overall about money, insurance, and your legacy. I'm confident that you'll learn something you didn't know about insurance, and really what I'm about to share with you can be a game changer, y'all. So let me get started on this. It's going to be a really quick and short webinar. I really just want to give you the basics, and if you want to move forward and learn how we can make this work for you and your family, then we'll talk, right? So let's get started. So our financial goals, for this is really just letting you understand more about life insurance, long-term care, 401ks, rollovers, annuities, mortgage protection, burial insurance, and infinite banking. Now, me helping you reach your goals is what this is all about. There are a lot of different things that, people learn over time or they don't learn over time. And what I wanted to do is make sure you, at this beautiful ripe age you are at right now, understand a little bit more about these different types of policies. Okay. So for me, I basically am working with different companies, A plus rated companies that have been around for hundreds of years, right? They have, let's see if I can get this done. They are revolutionizing. I can't even say the word. They are changing the game with their products. So what we knew as insurance before with our grandparents is not the insurance that we have now. So basically, I am in partnership with Ethos, a digital platform company. We are getting things done with this company where it's basically making it a lot easier to get life insurance and not taking weeks to do so. Like I said, A plus rated companies licensed. We have license. These companies work in all 50 states, and what I do is I basically represent them by marketing their different programs, right? And teach individuals just like you all the little nuances that you can benefit from with these different types of companies. Um, so my financial marketing organization is basically here to teach you about all the different companies, and they are listed here. So I'm pretty sure some of them: Mutual of Omaha, North American, Prudential, Foresters, American National. We work with them. We shop around for you to make sure you get the best solution for your personal needs. So today I wanted to quickly share with you the importance of life insurance. And this is not going to be a super long, dragged out insurance. I'm going to boom, 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 get this done as quickly as possible. And then, really, from there, you take control of what you would like to do moving forward and really just share with you the knowledge and understanding that would work best for you. So, my biggest pet peeve is seeing people who are connected to me go like have GoFundMe's or not set up something that can help benefit their family down the road, right? A lot of crowdfunding going on and selling plates just to get their family buried. But even with people with limited resources are able to get coverage and good coverage, and it's really just by taking action. Okay, so let me start before I go through and tell you about the different types of insurance. I wanted to give you the breakdown of the rules of money. Let's see if I can move this. I broke it. There we go. So give you the breakdown of the rules of money. Um, we aren't taught about this in school. The first part of this is the rule of 72. the first rule. The first portion of this being the rule of 72. This breaks down how fast your money actually grows. And I also know it's also known as compounding interest. It is what I have been taught is the eighth wonder of the world. So why aren't we taught about it? I have no clue. So, but we're gonna learn about it right now. So for all of these, all of these interest rates. There's 1, 4, 6, and 12. We're gonna go and we're gonna start with $10,000 at the age of 29 for each, right? So let's just say you had $10,000, age 29. The rule of 72 basically says take your interest rate divided by 72, and it's going to tell you how fast your money is going to double. So when we look at this illustration, at 29, at 1%, your money doubles every 72 years. Now, when you do 4% in a 72, it doubles every 18 years. And when you do the 1%, you're going to be putting your money in the bank. Sometimes people are putting money under the mattress, that kind of stuff. But we're looking past that. At 4%, it's doubling every 18 years. So that 10,000 at 65, you'll have 40 compared to 101 having 20 at 1%. When we get to the 6% and the 12%, 6% is doubling every 12 years and 12% is doubling every 6 years. And now you can see how knowing the interest rate on your money can help you understand that the investment that you're taking and the risk that you're taking, the higher the return, the higher the interest rate, the higher the return of the accumulation, right? The next part is number 2, how your money grows. So there's fixed, variable, and index. Now, when we're looking at fixed, we are looking at your money staying the same. There's no risk. You put the money in, it stays right where it's at until you add to it. The variable is kind of like tied to the market. So there's a lot of risk in that because you never know what the market is going to do. You never know what the economy is going to do. So when it's up, you're good. But when it goes down, you're bad. And you can lose a lot of money. I've seen and heard a lot of stories of people losing money just because they had their money tied up in a certain type of investment, like a 401k or a pension plan or annuity that is tied to the market, and they lost money from that. So, the last one is index, right? So basically, it's kind of tied to the market. It's mirroring the market. So as the money goes up, it caps at a certain rate, and then as the money goes down, it caps at a certain rate. So you're never really losing money. You're never really getting all the gains of the growth, but you are making sure that you're protected. Okay, so this is protection. So where would you like to be? You want your money to just stay where it is? You only build it if you put money into it, or do you want it to work for you where it's variable or index? All right. So the third part of the 3 rules of money is how your money gets taxed. So we have a tax now where you are taxed in like a brokerage, savings accounts, mutual funds. You have the tax later where the investment grows. And then when you take that money out, you're taxed on that money. So let's just say you have that 10,000, and at 65 at 6%, you're at 80,000. You want to take it out. That tax later is going to tax the 80,000. Now the tax advantage on that same 6% is going to tax in the beginning, but you're able to take it out tax free. So tax advantage gives you tax free growth, and it is one of the ways that you can get money and build your investment without having to be taxed at a later date. Okay, so those are 3 rules of money, right? Really quick and simple to the point. Just understand that your money grows depending on the interest rate. The type of growth that you have can be variable, fixed, or index, and how you are taxed on that also makes a difference on how much money you have when you're ready to take that money out. All right, so I wanted to get into a little bit about what is life insurance, and really it's a great way to have a return, to have peace of mind, to secure your future, have tax benefits if needed, and coverage for you and your family, right? So one of the 2 different options that you can have with life insurance is term, and the other one is permanent. So term is temporary, terminate. It doesn't last forever, right? So just imagine you're 35 and you get a 30-year policy as a term, with like $500,000 worth of coverage. It's going to last you to 65 years old. All right. So what that term means is, if you were to pass away, or if this lady was to pass away when she's between the ages of 35 and 65, her family will receive $500,000, and that really just creates generational wealth right away, right? And these policies are typically lower than other policies. So something like this could be about $50 a month. But the benefit is you get a lot of coverage at a cheaper rate. And this cheat code, and this could be a cheat code to wealth, like buying money for pennies on the dollar. So term has its benefits and it has its downfalls. So cheaper rate, but after 65, that person, if they live, will lose the coverage. And at 65, well, with life insurance, it's built on your age and your health. So at 65, you're a little bit older, 30 years older, and now you have to reapply for coverage, and it's based on your age and health. So the downside is when this person ends up outliving this policy, they would have to get another policy to get them covered from 65 till death, right? And they lose all those payments also that they've been making for the last 30 years of $50 a month or so. So that is what a term is. It gives you something right now to get you covered. It's always best to know like what you have. Some of these policies can be made into permanent. We'll get into that later. But some policies with term have return of premium, and it's called ROP. So ROP basically means that you can have a term policy. You can make those $50 payments for 30 years, but if you outlive the policy, you're able to get all of those premiums back. So it kind of gives you like a nest egg that comes back to you, but you would still be without coverage if you were to get that return of premium and that policy was to cancel after 65. And then you have to get coverage again. And here we are at age and health at a higher premium. So it could be more expensive and harder to get later down the road, right? Now, the other type of policy is called a permanent policy. And how this policy works, we'll go into that. How this policy works is well, it gives you coverage that can last past 100 years old. So it gives you coverage that lasts a lot longer, right? And there's a few benefits to having a permanent policy. It never expires, and it means your family is guaranteed that $500,000 that I was talking about. But then you also have little pieces that you can add into it. So permanent policies have living benefits with them, and it's totally different than what we knew, right? So we used to see insurance as you had to die to get the money, and your family gets the money, and all this good stuff. But now with living benefits, you're able to claim your policy money while you're alive if you have a circumstance. So let's just say if a client gets cancer, kidney failure, or a list of other instances or sicknesses, they can pull from this policy while they're alive, and the insurance company will pay you out if you get sick to help pay, for your mortgage, your hospital bills, keep the lights on, make sure your family's okay, and you don't have the financial burden of these medical expenses, burying you, and you're trying to live, but you now have this financial burden. So you never know you never know when you may have an unexpected change in health, and this can cover you if something were to happen or if you get sick. So it's definitely a game changer. So another option that can come with permanent policies is that you accumulate cash. So other option that comes with permanent policies is that you can accumulate cash, and it's really similar to like building equity in your home. So over time, as you're paying for this policy, you're gaining equity, and you can sell it for more than you bought it for. So you make a profit. Cash accumulation is very similar. Okay. You put money in, and part of it is growing in a savings account and gaining interest, where you can take the money out of that account at any time tax free, creating your own tax free income stream. So many people let me know that they see, everywhere on TikTok where you can build your own bank and infinite banking. Well, this product is what they're using. It's called the Cash Value Permanent Life Policy. It does cost a little bit more than the term policy, but you're also, it is for life, and you're also building value. So let's just say you put $300 monthly in. Part of the premium of this payment is going towards your living benefits, your permanent policy, and death benefit, while the other is added to a savings bucket. That can be used later with that down the road to later, take money out tax free to buy a house, to send your kids to college, to travel, buy a car. Another part of the permanent policy is a lot of people are taking, well, another product that people are taking advantage of is annuities. So let's just say you have money sitting, we call it, I say, sitting with your ex, which is your ex job that you had. You have money sitting there that's just, you think it's building for you, but you're still going up and down with the market with this 401k, or there's other different policies that are still tied with a job and in the market. So 401k is a typical one, right? So you can take that policy and transfer it, roll it over into an annuity where it gives you pension like income. You have it for life, and you can add and protect money from market loss also. So that's another option of a permanent policy that you can add. There's a lot of them that you can, use to benefit you down the road. All right, so that is my breakdown of the different types of policies, how you can make your money grow, and how you can use it to your advantage. There are a lot of different ways that we can tailor this information or tailor the policies to your current income, to your current goals. And that's why we end up getting on a call. So the last piece of this, and like I said, it's not going to take too long, is our financial pathways. So I do this as a piece of my current business, but we have entrepreneurs that do this on their own terms. So extra income, this is extra income that you're able to bring in just by helping other families. So yeah, I'm here to, to lay out and secure your personal financial plan, but I also want to let you know that we're taking applications to help my team of agents do exactly what I do and help others while other families. You can go out and help other families while also building extra income. I personally started this part time as a referral agent, so it's been a few years, and now I am out here learning more and more about all the different ways that these can help my clients. But it's also giving me a way to earn more, and I've become way more involved. Um, there are a lot of pathways through this. You earn extra income, definitely have all the support you need. We work whenever we want to. We make it work for you. Endless money opportunities, because you just never know who you're going to be able to help. You never know how excited it's going to get you to help somebody get away from GoFundMe and make a difference in their lives. So, but you could help so many people. You can help a lot of people, and I'm here to help you do that. So our mentorship program is free. You do not have to pay any monthly tuition fees. When you go to different schools, you got to pay monthly, right? This is totally different than that. You get in, you get licensed, which is not hard to do. It takes a couple of weeks. Study, take the test, and you really can start earning income within your first month, right? And you have all the help and support that you need. So I'm currently taking about 5 mentors that will work with me one-on-one to take action and change lives. And what I wanted to do to wrap this up is I want you to take a second to understand what you have gained from this, what you did not know, and what you know now. Um, and if you're ready to get started or just want to ask questions, I'm going to send you a link in your email where you can set a call with me. Um, and really, if you only have insurance with your job and you don't want it to expire, and you need an independent policy, book a call with me. There's lots of people that are getting coverage for their parents, $10,000 to $20,000 in burial insurance, just to make sure that they don't have to come out of pocket with that directly. book a call with me. We can get that set up for you. Plus, like I was said on my post, we're creating $1 million babies because we're setting something up while they're young. The life insurance is a lot cheaper and you have time on your side. So we can do that for you also. Book a call with me. Or, you want to just make sure your family is taken care of. Review the policies that you currently have. See what's going on with your 401k and how you can make those a better option for you in the long run. Any questions, we run quotes, you spread the word. Book a call with me, click the link, set a time. We'll go through all your options. And I love for you to implement this information into your financial future. And I hope I really gave you some tools to improve your life for you and your family and individuals around you. And, thank you again for coming. I'm looking forward to speaking with you. Use the link below to book a call. And there is no better time than now. So I hope to talk to you guys soon. Have a good day.